Jim. Before that, ran product and design and risk for Intuit Payments division. Before that, started my own company up in the valley that was in the ad optimization and click fraud space. Ran that for a few years and then sold that to ComScore. Before that, I was actually an early employee at PayPal, employee number 22, where I built all of their anti-fraud and risk systems. I've been a board member and advisor to a bunch of different startups, including Square, and helping Jack get that launched. And then some other fun stuff about making vodka. And if anyone wants to get married today, I can perform the ceremony. So, I thought maybe the best way to sort of dive into this would be just a real quick trip down kind of memory lane and pre-internet, what sort of digital payments innovation did we see? And it's not a lot. In the 1800s, wire transfers sort of arrive on the scene for the first time, where banks could, in an electronic way, move funds from one to the other. And then not much really happens for a while, at all. And then around the late 50s, credit cards show up, in sort of a sparse way, but they show up. And credit cards in itself were not electronic at that time. In fact, some of you may remember they're affectionately called knuckle busters, because sometimes they're very hard to move. That's exactly right, yeah, and then you'd be bleeding while you're waiting for them to sign the carbon copy. But they did spawn other things like, about a decade later, point of sale systems, right? And so for the first time, you could go into a retailer, use your credit card, and magically you were going to be billed at the end of the month, and you got your goods right then, and you didn't have to use cash. And then around that same time, bank clearing systems like the ACH network started to show up. And in the 80s, you get ATMs and debit cards. And the point here is there wasn't a lot of innovation, not really a ton of big things happening. And the vulnerabilities were pretty minimal, right? Most of these interactions were in person, penetration's low. People didn't have credit cards in the 70s and 80s like they do now. Data was not online and therefore not hackable. And generally customers felt protected, right? If there was an issue in one of these sort of interactions, they felt like they had recourse. And holding someone up at gunpoint at an ATM is not terribly scalable. So then what happened? This. And for any of you developers in the audience who don't know, this is what the internet looks like. And I know this because I went to the Google and I typed in image internet and this came up. Yes, thank you, Google. So there we have it. That's actually what it looks like, and it's really cool. But what's really important about that, right, is the internet ignited a flurry of innovation, right? And you've got person-to-person payments and e-commerce and online banking, and I can sign up and get a loan instantly online, and mobile shows up. You've got mobile apps and mobile point-of-sale systems and Square, and then the emergence of Bitcoin. And as you can see, right, like this long period of covered wagons and not much happening, and then a bunch of stuff in a very compressed period of time. And with that innovation and wonderment came also a significant amount of vulnerabilities, right? So these transactions are suddenly instant, and with instant and speed comes risk and issues. Anonymity is now possible, right? If I want to conduct fraud, I don't have to be right in front of you, I can do it remotely. Data is now stored online and therefore available to bad guys online. Tracing of the bad actors becomes challenging because one, the anonymity, right? You know less about them. And two, the little bit you do know, they start getting more clever in terms of anonymizing their IPs and doing different things to make it even harder to track them. And back then, some of you may be a little young to even know this, but back then, like basic technical security features we take for granted right now, like, widespread use of HTTPS, CAPTCHAs, things like that didn't actually exist, like really basic stuff, and so that all had to be built. Standard protections for all these new things were a little murky, and then mobile, of course, introduced a new wrinkle. PayPal's a great case study for kind of why this can be an issue if you don't evolve your security to meet the new innovation and the new products. And we were of issues, of which I've sort of bucketed into three groups. One, we were bleeding cash massively due to fraud. We literally had a quarter in the summer of 2000 where we lost $21 million to fraud, 8 of which came from one single fraud ring. $21 million. And we were a startup. We weren't making money yet. We weren't even charging. Second, customers were losing faith. They're filing Better Business Bureau complaints, lawsuits, media complaints, who then would trash us. Phone lines were blowing up. We were missing proper consumer protections, and people were closing their accounts. And third, regulators, law enforcement, some of the key sort of oversight bodies were very suspicious of us. And we had licensing issues. Law enforcement didn't trust us. They thought we were harboring drug dealers and prostitutes and criminals. Sound familiar? Right. And at one point we were given a 48-hour notice by MasterCard that they were going to turn off PayPal and no longer let us to process PayPal payments. So clearly we had a bunch of issues that we had to tackle. So what do we do about it? I bought some new clothes to interview in, polished up my resume. No. Well, I did do that. But in addition, we attacked all these things, and I'm not going to go through them all, but the point was we sort of in a 0 to 60 in 3.2 seconds way got incredibly sophisticated around building new authentication schemes and hiring PhD statistical modelers to come in and build models for us, and building our own proprietary software to monitor bad guy activity because none of the off-the-shelf solutions would be useful to us. And we spent a lot of time with customers, educating them. Here's what a phishing scam looks like. Here's what you can do about it. We've got your back. And we launched consumer protections to make them feel as though this new, weird PayPal payment mechanism was as safe as all of the traditional mechanisms they were used to using. And then we built a lot of bridges to regulators, law enforcement, made friends with them, educated them. At one point we gave Palo Alto Police Department was still using like old Commodore computers or something really scary, and we actually just gave them a bunch of computers. But it went a long way. And so the point is, right, we sort of attacked all these things and attacked all these vulnerabilities, but it was a much different world than what we had been dealing with kind of 6 months earlier. And so I think therein lies kind of a recipe for us, right? How do you sort of in a post-internet world and now in a Bitcoin world survive? What's sort of the key kind of ingredients to make that happen? And I think it kind of boils down to 3 things. One, ease of use. If you're not building a product or an interaction that is not only as good, but really better than what the end user is used to, it's not going to matter. But at the same time, you got to do that in a way where it's technically sound and secure. And then finally, whether it's real or perceived, there's got to be accountability and responsibility and protections around that entire environment. And so for Bitcoin, I think that's really it, right? It comes down to those 3 things. One, we got to fix security. Roughly 1 out of every 10 Bitcoins in existence have been lost or stolen, 10%. That needs to be ratcheted down to something very negligible. Otherwise, we'll never see mass adoption because people won't trust the ecosystem. But we got to deal with ease, right? So they got to go hand in hand. You can't sacrifice ease of use for security. You can't sacrifice security for ease of use. Using and developing on Bitcoin must be simpler than any other current payment solution. And then finally, we got to educate and protect. Consumers, merchants, regulators, law enforcement officials, politicians are all constituents of this ecosystem we're all building. And so we need to spend time with them. We need to build those bridges similar to what was done at PayPal and some of the early post-internet payment companies to make all of these participants feel like it's safe, like we know what we're doing, and like the entire sort of system is appropriately protected. And that's it. Questions, comments? I don't know how much time we have left. Yes?
Thank you for that. That's a great explanation of where we're at right now. What are some of the things you're seeing as the first steps to get us in those directions? What kind of things are you focused on? What are your tools doing? What are next steps for us?
Yeah, it's a great question. So there's a bunch of things going on in the industry. Certainly multi-sig is a capability that's very well known. It's at GEM and other companies throughout the industry, it's becoming more popular, right? It's becoming more sort of accepted that this is how you need to build out your product. And if done right, and if done in a way where the customer actually doesn't even really sort of realize they're using multi-sig, it'll actually present for us an opportunity to be safer, I would assert, than, in conjunction with other things, but safer than traditional financial services payments. So I think there's work underway by Jim and by other companies to overcome this, but there's a lot of work to go. And it's going to be, the other point I would make is I think it's going to be a bridge between new capabilities like multi-sig, adoption of hardware security modules with kind of traditional risk capabilities, right? Modeling, monitoring, authentication, all those sorts of different things. If you kind of bridge those together, then I think you've got a solution, again, as long as you do it in a way where it's not too much friction. Yeah.
It seems like there's a little bit of like a marketing problem right now. Like who really wants to figure out which kind of wallet they should use or how to apply it to themselves, whether you're like enterprise or consumer. And so is that just something that competition is going to have to kind of weed out, or I guess like that kind of goes to the whole thing with UBPs. How does it become more simple for people to be like, oh, you know what, I can accept big ones in my business, and start charging their customers? What makes it easier for adoption?
I think one way to think about adoption is to kind of look at it in terms of the different constituents. And the beauty about Bitcoin is it's inclusive of a wider set of individuals than sort of any payment mechanism we've seen before, right? Meaning that, like, if you look at developing countries, there is no notion of having a bank account or having a credit card, right, or transacting electronically. And Bitcoin with mobile can change that. And so you go, okay, well, obviously there's an incentive there, right? If you're an individual in any sort of non-Western country, there's potential opportunities to have access to something you haven't before. For merchant, I think, if done right, and again, it goes back to sort of the product and the ease of use and integrated in a way where it's no work on their end. These are not Bitcoin experts. There's definitely a incentive and benefit in that the cost structure is just much more beneficial to them than what they're used to with traditional payments. I think where we as a group have work to do is going to be with consumers in developed countries, where it's not that difficult right now, right, to pull out your credit card or to pull out a $20 bill. And so there's got to be some collective work and wisdom around not only how do you build something that's as good, but how do you build something that's actually better through some combination of ease of use. I don't have to think about it. I feel like it's more secure than what I actually have. Potentially incentives and rewards, right? I incorporated that as well to sort of foster adoption. So I think that's the group where there's a lot of work to do. The others, I think, will more naturally come, but it's all about the product. Yes, Matt.
I feel like there's a problem where in Bitcoin, obviously security is super important, but most consumers don't have any way of assessing what solution is secure. Most companies claim they have like their block graphics on the front of the website, and that's all you have to go.
Being great security.
Yeah. So how do we make it clear to users which solutions are secure, or should they know?
I think I agree with your statement. I think it's. I think part of the needed element to that is time. if we're all new, right? We've all been at this 6 or 12, maybe 18 months. And so there's not this, right, like people feel Visa, MasterCard, American Express are safe because they've been using them for decades, their parents used it, right, there's comfort there. And they didn't just read about it on a website. And so, so I think part of this is going to be sort of a time element and just demonstrating, right? Like, Company X is growing, is getting a significant amount of users, has not had a breach. Their users are happy with the interaction, happy with the security, and these guys are clearly demonstrating that they're innovating, right? They're not just saying it, but that they've built into their product new capabilities that are defensible in terms of being as good or better than traditional payments. And so I think that's what it's got to be, but there's going to be some sort of word of mouth, experiential type ingredient dimension to that. Okay, thanks everybody.
Thanks, Dan. All right, sorry to cut you off, but I wish you had more time to speak. That was pretty quick. And I think it's really interesting listening to people from PayPal. William Quigley, I think, was an investor, and he'll be